What's up, guys, and welcome to our brand new series with one half of the tag team champions, aka the Studly Boyz, with of course your hosts, Ned and Talos. Now, funny enough, I actually wanted to start a series a while ago, but during one of our live streams on Twitch, we were talking about investments and whatnot, especially in the gaming market and outside the gaming market. So it kind of brought up a good idea. Why not talk about investing right here on YouTube? Now, being that it is first of its kind in this channel, definitely let me know if you guys like it. Give us a like and subscribe, a follow and comment down below. And of course, if you haven't already done so, be sure to check out our Twitch, the Studly Boyz, linked in the description down below for you guys to check out as well. Now, the big talking points, especially nowadays in the world of gaming, is the next gen consoles, the PS5 versus the Xbox Series X, aka Sony versus Microsoft. Between those two companies, who would prevail? And that, my friends, is what we're going to discuss today. And it's about to get juicy, so let's dive into it. Now, before we actually go more in depth with this, a word from our sponsors. Now, for today's sponsored video is Robinhood, the easy to use investment app right at your fingertips. Investing with this app has been made so much easier, and all you have to do is check out the affiliate link down below to get your first free share, whether it be Facebook, Amazon, or any one of the top 100 shares in the market. You can also invest in ETFs, cryptocurrencies, and much, much more. You can also sign up for Robinhood Gold as well if you guys want to buy shares even after the market closes. Or if you want the early birds before it even opens, check out the description down below, sign up, get your free share, and invest in your future starting today. Now, of course, before we get started, I do want to mention that I am not a financial advisor, so these are just my personal opinions. And if you guys want to chat about it in the comments, definitely leave it down below. Let me know what you guys think and if you agree with me or not. Now, let's go ahead and talk about these two companies in particular because they're more than just console sellers. They're both tech giants in its own right. Firstly, let's go ahead and roll into Microsoft right here. And as you can see, Microsoft engages in development and support of software, services, devices, and solutions. It operates through the following business segments: productivity and business process, intelligent cloud, and more personal computing. The firm also offers operating systems, cross-device productivity applications, service applications, business solution applications, desktop and service management tools, software development tools, video games, personal computers, tablets, gaming, entertainment consoles, and pretty much much more, as you can see here. So I would say their gaming market is a very small percentage of that. As of today, they're right around $200 per share. They have been going up. Of course, there was a slight dip. We all know what happened there, but it's quickly risen past that dip. Now it's Sony. Sony Corp engages in development, design, manufacturing, and sales of electronic equipment, instruments, devices, game consoles, and software for consumers, professionals, and industry markets. It also operates the following segments: game and network services, music, pictures, home entertainment, sound, imaging products, solutions, mobile communications, semiconductors, financial services, and all others. With these two companies, they're all over the place. They're all over the place. So regardless of what you choose, they're all pretty damn good. And currently, as of right now, Sony is running around $71 per share. So in terms of like affordability, Sony will definitely be the one to choose there. But today we're going to talk about pretty much like between these two, would the release of the gaming console really affect their stock market? Yes or no, and why? I personally believe Sony really needs PS5 to succeed. This chart doesn't show it complete justice because obviously the PS4 came out right around 2014 timeframe, but the earliest I can go back is 2015. But looking at this, PS4 didn't really do much for it. Obviously, as you guys recall, Sony in the console department, it's not one of the highest markets. If anything, the biggest one would probably be like their movies, music licenses, and stuff like that. Electronics to like the TV segment, stuff like that is also probably a small portion of that as well. So in terms of the stock market, it hasn't really done much. It was kind of floating around the 2632s for multiple years. It was only until 2017 where it spiked all the way to like 2018 to $60.65 per share. And then it kind of dipped again around the like early 2019, and then spiked back up again until around earlier this year. Obviously, with the release of the PS5, it's going to be a tremendous increase, but how tremendous? Probably not as much as you think, because obviously, if you guys know, they're going through some negotiations right now with Disney, and they had their kind of deal with Spider-Man, and of course the new Spider-Man movie will be coming out as well to kind of reflect in that stock market. Now as we roll into Microsoft here in its 5-year history, it's been consistently going up. So like in the early 2015, I believe the launch of the Xbox One was around the same time frame. So, and as you know, they're more than just a console developer. They also have servers as well, Azure, and it's probably one of their big leading reasons for its growth. And it's been very consistent, extremely consistent. It spiked a little bit higher around the same time for 2018 to 2019, and it continues to climb even further during the pandemic stuff, because of obviously the use of servers, and spiked up tremendously during that time frame. Now, what I like about Microsoft above all else is the fact that it offers dividends. It has a dividend yield of 1.02%. Sony, however, does not have a dividend yield. It used to have a dividend yield, but I believe they took it away in around 2014-2015 time frame. And I don't know if it came back ever again, but I know it might come back. And the reason why they took it away is because they weren't doing so well back in early 2014-2013 days. If anything, if I had a longer history here, you could see how much they dropped, because they were at $80 at one point, and it dropped all the way down to 20, and it's finally got up to almost where it was. Now, as we talked about before, the PS5 is only a small portion of its actual overall growth here in its market, its valuation here. Back in the day, if you remember, Sony had their own laptops, Vaio. That was a complete failure, so that was completely shut down and dropped its valuation. They also had Sony phones, that also didn't do well, that was shut down. So the only thing that it really has is its TV markets segment, obviously is music, movies, and of course it's consoles. Consoles is definitely one of the ones that are like, among other electronics as well. But with its consoles alone, it's going to help it a little bit, but not tremendously as you may think. Now, Microsoft itself is kind of going through a little bit of a hiccup, if anything. Obviously, if you guys recall, they sold their Mixer. They were part of Mixer. They sold that, partnered up with Facebook. Of course, their streaming platform is only a small portion of it, and the reason for that is the fact that they're going strictly cloud. They're working on this xCloud feature. Cloud component and cloud computing, anything cloud related, is definitely going to be the future in this industry. So that's what they're pushing forward. If you look at the market cap right now, it's sitting at $1.52 trillion. So they definitely have the money to kind of play around. And if they fail here and there, and then the bottom line, they're not going to be affected at all. Now, when it comes to Sony, they're still doing pretty well. They're at 87.09 billion, but they're not doing as well as Microsoft. They don't have the luxury to kind of like play around too much. They still have the flexibility, so they do mess around a little bit in other departments and other sections. They can still kind of bounce back from it, but not as quickly as Microsoft can bounce back. The one article I was able to pull up about this is basically Sony stocks might finally get the love it finally deserves. With the unveil of the PS5 console on June 11, 2020, Sony managed to grab investors' attention again. This comes from a relatively dull period for the Sony stock, which is obviously true. But at any time, Sony, Microsoft, or Nintendo might make an announcement about the new consoles, they managed to regain gamers as well as investors' attention as well. After all, gamers need those platforms in order to enjoy many of the games that those other companies produce. So according to this article, it looks like Sony definitely needs this more than Microsoft in some regard. Now, a lot of people say that Sony is going to win the console war for the PS5 and next-gen consoles, and that may be true. I don't think Microsoft cares much. If you see how easily they can just shut down a company, aka a Mixer, I can see them potentially even shutting down their own consoles if it doesn't go as well as they think. Even MSN Messenger was able to compete against AIM at the time, and now their biggest failure, Mixer. Mixer shutting down Mixer and moving most of its streamers to Facebook Gaming as part of the strategic partnership is entering with a social media giant. So as you can see here, Microsoft, they're willing to just let go of their failed projects and stuff like that. And of course, if Xbox Series X also fails, that too may be its last hardware console. Now, if you guys recall, I was talking about the xCloud. if they do go the xCloud route and compete with Stadia in terms of the cloud market, cloud gaming market, then potentially that might be their new venture. That's probably what they're putting most of their money in and investing into. Xbox Series X overall might take a fall here. I guess time will tell on what this all means, but we can only speculate at this point in time. Now, of course, as I mentioned before, I'm not a financial advisor. It's just my personal opinion. But like, I think Xbox Series X in the whole gaming department is only going to have a small impact in the overall Microsoft, especially if they move into more cloud gaming or cloud computing and upping their cloud development and stuff like that. And actually might spike higher than Sony ever will. Obviously, when it comes to investing, there's either a short-term investor or a long-term investor. In the long run, Microsoft seems like a clear winner in my eyes. But in the short term, I think Sony might be a good buy. Now, both of these companies and its stocks are good in its own right. But there's actually one stock in particular that you guys should definitely check out. AMD. Now, why AMD in particular? Because AMD is actually going to be part of both the PS5 and the Xbox Series X, providing both the CPU and the GPU, according to this article. AMD providing custom chips for both PS5 and Xbox Series X that will handle the processing and graphical power of the consoles. The company able to produce these chips is critical for them launching at the end of 2020. And looking at its 1-year history, it looks pretty damn good. But check it out in its 5-year history. It's even damn near perfect. I personally got AMD when it was right around this time frame at $1.50 roughly, and right now it's well over 50 bucks. Well over 50 bucks. So this is one of my better investments, and obviously I definitely recommend grabbing AMDs if you can. And I think it's only going to go higher from here. Now, compared to Intel, is roughly the same price at Intel, but in terms of gaming and game computing, AMD is definitely where to go. The only con with this is that it doesn't offer any dividend yield, so it's more of a growth stock in that regard. That any money that it does get excess, it goes back into reinvesting into new technology and stuff like that. Versus Intel, where it does offer quite significant dividends. Intel in this case is actually much better than even Microsoft, where it has a 2.16 dividend yield. If you're more of an income investor, I definitely recommend Intel over AMD. But if you're looking for some growth potential, high growth potential, I'll definitely recommend AMD for you guys. The fact that they grew this much blew me out of the park. They're well below the $1 billion mark before when I initially invested, but now they're valued at $64 billion. So it shows the level of growth there and the level of trust investors have in this company. Obviously, I'm not a financial advisor. I can't tell you what to buy. It's just kind of like what I've been doing and what I've been investing in. And hopefully that's okay with you guys. But regardless of all that, I think AMD is a true winner for the future. That's pretty much all I got, guys. I guess so, I haven't got a clear name on what this series is going to be called. Market Watch with Talos. Investing with Talos. If you got any suggestions, definitely let me know in the comments down below. But this was fun, just talking about investing in stocks and stuff like that. Now, obviously, if you guys want to continue the conversation or just like want to chillax with us while we live stream, definitely check us out on Twitch. We stream Tuesdays, Fridays, and Sundays on Twitch/TheStudyBoys. So if you guys like this and want to see more of this, don't forget to like, subscribe to our YouTube channel. And of course, that's all I got. So love you guys, stay awesome. I'll see you in the next video. It's Talos out. Alright, laters. What's going on, guys? Ooh, it's so close.